Hello, everybody, and welcome to episode number 69. Yep, that's right. Episode number 69 of Confessions of a Market Maker. I'm your co-host, Ray, aka All Day Ray, aka Errol Flynn. And I'm joined here by my cultured co-host, former market maker, 20 years and current day retail trader, a man who's dropped so many jewels you would think he was careless. I am talking about 2021's Vinny Chase. Hey, Jay.
Hey, Ray. Good, brother. How you doing?
Oh, I'm doing great. And we're sitting here with a man who was a 50-year market analyst, a founding member of the CMT Association, who in 2015 received the Market Technician Association's annual award for lifetime achievement, the author of 4 trading books. Of course, I am talking about the widely popular Walter Deemer. Walter, how's it going?
Just fine all day. How is it going with you?
Oh, it's going great. It's
You look a lot better than JJ.
Because I'm out looking for supply.
I'm doing good, Walt. It's good to talk to you again. It's a little cloudy here in South Florida, but the last time we had you on the podcast was, I believe it was like right as the pandemic was starting.
It was.
In 2020. I know your facility wasn't really letting you out of the room, a lot of restrictions. How are things over there now?
Well, I'm in a new facility. It's much nicer. It's much greater. And they did let me out of the room long enough I can go out and have breakfast with some people now. Yes.
That was a nice breakfast we had where we had Mulligan's. Shout out to Mulligan's.
Yep.
Yeah. Nice.
It's wouldn't people have liked to have been a fly on the wall for that one?
yeah, indeed. That was fun. You, me, and Steve. Shout out to Steve. And yes, Walt, to start the podcast, I want to ask you just a few questions as we normally would conduct, and then I want to read some quotes out of your book when the time comes to buy. You won't want to. Many great quotes that I'd love for you to expand on for the listeners. But for those who don't know you, you mind just just telling the listeners about your background in financial markets?
Got interested in the stock market as a kid. A friend saved the Wall Street Journals for me to read when I was 12 years old. Got into technical analysis interested in 1961 when I took a copy of Joe Granville's book home from the library, and Joe Granville is very persuasive, as you well know. Mm-hmm. And a lot of people of my era got hooked on technical analysis with him. Went to work for Bob Farrell at Merrill Lynch, one of the legendary market analysts of all time. Went to work for Jerry Sy at the Manhattan Fund, which was during the go-go years. I was part of the go-go years. Actually, I was on page 147 of the book, The Go-Go Years. Went to work for Putnam in Boston, a real investment manager at the height of the Nifty 50 craze, which they were part of. Struck out on my own in 1980 and retired in 2016. Survived.
Wow.
And very glad that I don't have to write market reports anymore today. Let me tell you.
Well, that's what it is. It's a survivor's game. I remember us having this conversation at breakfast. And we'll get a little bit into that. And so just a reminder to the listeners, if you'd like to trade alongside JJ, myself, and a supportive community of traders, join us at microefutures.com. Walter, speaking of writing reports, you brought up at the breakfast we had about the, Walter Deemer Memos.com. You have
DeemerMarketMemos.com. Yeah, I decided when I moved into the independent living facility because I got too old to keep up the house. So I didn't have to batten down when hurricanes threatened anymore. And I had 49 loose leaf binders full of my memos and another file drawer, and I couldn't take them with me. So I had them scanned on a little thumb drive. And so they were all there. And then I said, well, if they're all there, I can put them on a website. So I had somebody set up a website, and now all 2,600 of them are on deemermarketmemos.com. There are a few from the 60s. There are quite a few from the 70s, and there's everything I did from 1980 on. Some of them are really, really brilliant, and others are incredibly embarrassing. But if you want to see the way the market looked at the time, and there are charts in most of the reports, you can go back and look. So if you want to pick during the silver crisis in 1980, the Hunt Silver, you can pick a report out and look at it, what I was saying, for better or for worse.
JJ, I know you were looking at a few, weren't you?
Oh yeah, I look at them all the time, right? I'm a huge history buff with Wall Street. So, having Walter on the show is this is living legend. It's so cool. Because I grew up watching Wall Street Week, and he was on it, sitting next to Marty Zweig, who was when you're my age, that was the only sort of thing that we had. There was no internet, there was nothing. So this Wall Street Week would come on every Friday night, and Louis Rookheiser was there. And even though I had no idea what these guys were talking about, there was something, it was you knew you wanted to be there, right? You knew you wanted to. There was something about it that just pulled you in as a kid. And so, yeah, I've been reading through your memos, and it's just, and your research, it's to have an archive like this is just a beautiful thing, because I'm a big believer that we can learn from the past, and, gentlemen like you, that you leave us these kinds of, this kind of knowledge. It's just a beautiful thing.
Well, it's nice of you to say, but it's interesting because I just did a talk. Some people I met on Twitter that I ended up giving a presentation last month to a group of high school students. And I told them the thing is that they are starting out at such a much higher level than we ever did.
Mm-hmm.
I mean, we didn't have tick by tick analysis like you did. I mean, there was no VWAP trading back then because nobody had tick by tick analysis. I mean, it didn't exist.
Yeah.
And so you're starting at levels that we never even dreamed of. And so it's nice that I started out in the Stone Age, and now you're in the a much more advanced age, the computer age, I guess.
Yeah, definitely. It's funny. It's just amazing because, you look at, I'm a big, student of old short squeezes in the past, and things like Piggly Wiggly and things like that, I can't even remember when that one happened. The Piggly Wiggly short
I think it was 1922.
1922. Yeah. But did you remember anything from your particular time? Like any short squeezes that were sort of notable at that time in your day?
There were a couple that tried. There was during the gambling stock mania of the late 1960s, during the go-go years, gambling stocks were hot, and that was when Mary Carter Paint changed their name to Resorts International, for example.
Oh, okay.
That's so Resorts International used to be Mary Carter Paint. And there was a stock named Parvin Dorman, and Parvin Dorman had some casinos out in Las Vegas. And the big thing was Howard Hughes came in and was running clean books. So all the skimming that was going on all of a sudden was exposed, so that all of a sudden the casinos were a lot more profitable than people thought they were. And Parvin Dorman was a little stock, and we owned a bunch of it at Psy Management, and there were a couple other people. Hartwell and Campbell owned a bunch of it. And I remember one day, the guy who owned the stock sits down and he says, "Look," he said, "we own X number of shares, and Campbell owns X number of shares, and so and so owns X number of shares, and that leaves 75,000 shares in the float, and there's 150,000 shares short." So it's probably going to work. And the only problem was that there was some shenanigans, and the SEC stepped in and did some investigating because some of the transactions that they were involved in were not, as they say in the trade, kosher.
Okay.
And so one day I'm in with the, but I mean, so this was a short split. I mean, it was going to happen, but so I go in, I'm in to the walk by the analyst store, and he's holding office, and he's holding up a big piece of paper, and it says, "Fail not at thy peril." And that turns out that's how a subpoena starts.
Oh.
I've never seen one personally, as I know none of you have, but he had one. And a week or so later, I walked by his office, and darned if he didn't get another one. And that led to my now famous rule: when they serve the second subpoena, sell. But, so it was, as all short squeezes do, that they are very nice for a while, and then they end. And when they end, the end can be rather unpleasant. So it can be unpleasant on both sides. I mean, no short squeeze has ever lasted forever.
The second
So
subpoena, JJ. Yeah.
Yeah, I love it. I love it.
Yeah.
I mean, it's a fun ride on the way up. It's a fun ride on the way down.
Yeah. The whole as you call it, the go-go years with the gaming stocks when we were talking about that in at breakfast, that was something we were talking about, them skimming the books, because I mean that was real mob heavy back in those days, correct? Yeah,
It was indeed.
Yeah, interesting times. I want to ask you back about your memos, right? Because you said there was some good ones and some bad ones, maybe some bad analysis you had. Could you give us an example, a good one and a bad one that stick out to you?
The bad ones, I think anybody watch, JJ has probably come across a number of them that he's too nice to mention, I hope, but there are probably some. But the good one, I think, was in March of 2000. I wrote one called Arrogance, and that was when, in 2000, that was when the new economy was taking over. It was the internet was, it was the height of the .com boom. Mm-hmm. And what the memo in essence said: look, I know these are the most exciting, most innovative, most disruptive companies in the universe. The question is, what price are you going to pay for them? And there's a limit. And I don't know what the limit is, but there is one. Don't say there is none. Mm-hmm. And that happened to be just about the peak of the .com boom. So you could, shall we say, what I was doing was just saying that the exuberance got to an extreme. And I was, I sort of compared, I trotted that out a while back when some of the when Kathy Wood's ARK investment, that everybody was excited, and I said, basically, I have no quarrel that these are obviously the most exciting, the most innovative stocks in the world. But does that mean the stock, the companies in the world, but does that mean the stock is to buy at these prices? You have to ask yourself. And, as people who trade from the short side know, there are, stocks that get way ahead of themselves and can be very profitable to go short as they come back to reality.
Mm-hmm. You've said you've never seen a market like this. From your 50 years of experience, Walter, paying attention to markets, what are you seeing here in 2021?
Well, there's nothing like that. I mean, everything is different. As we said at breakfast, back in the early 60s, outliers accounted for 10% of the volume in the New York Stock Exchange. So there was heavy public participation because odd lots were anything under 100 shares. So 10% of the volume on the exchange was from people trading less than 100 shares. So there were a lot of transactions to analyze, and they were piling into aerospace stocks and vending stocks and bowling stocks and electronic stocks. And eventually it got, overdone, but there have been waves of public participation in the market before. They're just different because they're different mechanisms to trade. They're different devices to trade. I mean, back then, if you put in an order, it took you 5 minutes to find out whether it was executed and at what price. Now it takes you 5 milliseconds, and everybody bitches about the fact that the HFTs are clipping every order. But back in the day, there used to be these guys called specialists, and the specialist would quote a stock, and it'd be 53 3/8 to 3/4. Now that's 3/8 of a point. That's 37.5 cents. That's more than a fraction of a cent. And there might not be any supply up on the offer, or there may not be any on the bid. Now you go in and there's a fraction of the cents, and you get instantaneous execution. It's in my opinion, it's a small price to pay for liquidity. Exactly. If you want to do something, you can do something instantly. You couldn't do that back then. You couldn't trade the way you're trading today back then. So the rules, the game changes, and the human nature is the same, but the mechanism is different.
Sure. That makes a lot of sense. And how would you say, maybe just speak to the volatility compared to years past that we're seeing?
In years past, something would happen, and the stock would take weeks, months to react to it. And now it takes hours. There's instant. So you get these violent moves, instant reaction, and some company comes out bad earnings after the close, the stock instantly goes down 7.5%. I have no idea how they come up with that price, but all of a sudden it goes to some price and instantly and stays there. In the old days, it'd take days and weeks for it to do that. So the trends that used to be so valuable to play in the past don't exist anymore.
Right.
Necessarily, because you'll get instantaneous reaction.
Right. So, Walter, do you consume any financial media? Are you watching anything?
No, I do not. I do not watch financial TV. As a matter of fact, one of the quotes in my book is, if you want to watch CNBC like the pros do, turn the sound off. And the reason is, I have been in a lot of trading rooms in my day, and they all have CNBC up on the screen. I had, when I was working, I had 2 TV sets in my office back in 1990 during the Gulf War. The one was tuned to CNN, and the other was tuned to CNBC. And all of a sudden, all the trading rooms put up a CNBC and a CNN monitor as well. But every trading room I've ever been in, they all had CNBC on the screen, but they never had the sound on. And I once gave a talk to the CMT Association, and I had a big sign that I wanted people to buy. Just said in big capital letters, "Turn the sound up." And what that was for is for people who were guests, regular guests on CNBC. The next time they got on, I said, just hold the sign up, because they're looking at the screen, and all of a sudden they'll see this big thing that says, "Turn the sound up." And so they turn this out. And so John Bollinger, who is on CNBC a lot, he insisted that I give him the sign.
That's funny. And
I don't know whether he used it, but anyway, the point being is that there are a lot of opinions on financial television, and as my former colleague Doug Cass has observed, opinions are like rear ends. Everybody has one. Only he used a more colorful term than rear end.
That's funny. The guy Bollinger you brought up, he's the creator of Bollinger Bands, correct?
Yes, he is.
Yeah, it's interesting. Walter, I want to ask you about Bob Farrell, who is someone you consider your greatest mentor. Can you tell us a little bit about him?
Well, he survived the corporate wars at Merrill Lynch, but he was a card-carrying contrarian, and so he sort of got me in, onto the contrary opinion side, which, if you're an institutional market analyst, looking at the long term, you have to sort of look at the contrary side, which gets to be tough because, as somebody once wrote about me, telling the majority of your clients that they're probably wrong is not a very good business model. But when if something obvious, that I forget who said it, I just read it the other day, that today's price is tomorrow's news. So
okay, interesting. Yeah.
What you're seeing, the market told you more about how the stock market told you more about how the economy was going to recover from the COVID virus than the newspapers did.
Right, exactly, and that's a quote you have in the book, which I planned on asking about, and I really love it, and that's what I love about the quotes. Like your quotes are so it tells a lot but saying a little. It's like just right to the point, which I think which was kind of the point of why you came up with these phrases, right? To whoever you were delivering this message to, or to the traders, et cetera. Am I right on that basis?
Yeah, their attention span was very little, and even though they were all Harvard Business School graduates, you had to hit them over the head with a 2x4 to get the point across.
Yeah.
So I would hit the big one was when the title of the book is "When the Time Comes to Buy, You Won't Want to," and that was, one day I'm sitting at Putnam and the market is going up. Oh yes,
there we go. Plugging it for you.
There it is.
Yep.
Yeah, and that by the way, when the time comes to buy, you won't want to. That does not refer to the book. That refers to one of my quotes. If you do want to buy the book, it's very expensive living in here. Look at my library back of me and everything.
Exactly.
Keep this place up, and if you buy the book, I get a very small amount that enables me to stay here for another 3 or 4 minutes.
Oh yeah. Oh,
but,
man.
Anyway, so the fund managers come into my office and the market's going down, starts down, and they say, "Well, you called this short-term reaction, right? Well, is it time to buy yet?" And I said, "No." And next day, the market goes down some more, and they said, "Is it time to buy yet?" And I said, "No." And finally, to get them off my back, they came in and I said, "When the time comes to buy, you won't want to," which is a nice way of saying by the time the market has made its move, the reasons will be obvious. The media will be full of reasons why the market is doing what it's doing. And that's the time to buy. Somebody once said, I don't know whether you all day or the voice or the mask of death would agree with me, but somebody once said that the very, very best trades you make are when you push the enter button to make the trade. You want to just throw up on your computer because this is so crazy to be doing it.
Exactly.
And the worst trades you make are the ones when you hit the enter button and you say, "Man, got this one locked. I'm going to go take my, I'm going to go spend my profit."
Exactly. Oh, sorry.
There are a lot of computers involved in the business, but it's still humans that are involved.
Yeah.
And human emotion never changes.
That's true.
Fear, greed, hope, and vanity.
And that's like the fascinating side to the market to me is the paradoxical nature of it. And like you said, I think like having that, and I think it's another quote of from the book about having like if you have no fear, that's not like that's probably not good. You got to have a little bit of the tension in your body, I think.
A lot of tension.
Yeah.
Because when you I will, every time I think I got this thing figured out, and this has happened for all 50 years plus. Every time I came up with the idea that I finally got this sucker figured out. I finally got it nailed. Sit back, put my feet up on my desk, light a cigar. I get my head handed to me. Mm-hmm. It's just the way it is. And the ones where you keep looking yourself in the mirror and say, is this really doing what I think it's doing? Yeah, it's doing what you think it's doing.
Yeah. Yeah. And I
By the time it becomes obvious, it's obviously wrong.
yeah. And I like how when we had breakfast, because we were talking about short selling, and you were like, oh well, when it's time to short, there'll be no shorts available.
Yeah, when the time comes to short, you won't be able to borrow it.
Yeah,
Yeah.
there'll be no borrows. Yeah.
Exactly.
Oh,
Right.
well, Walter, I know you're at least aware of cryptocurrency. I don't know how much of how much you've researched or you've done into it. Do you have any thoughts on cryptocurrency and decentralization?
I don't. You can't teach this old dog new tricks. Although I will say that the people on the various mailing lists that I still belong to seem to think that cryptocurrencies are one of the greatest trading vehicles of all, because somebody said it's a great trading vehicle because there are no fundamentals.
Mhm.
And I guess there are a few fundamentals, because every once in a while Elon Musk opens his mouth or sends out a tweet or something like that. But there's really not a whole lot of fundamentals in the thing. And the fundamentals probably don't apply to anything other than the Bitcoin, which everybody knows about, but there's a zillion others that people play in. So I would say what I know about cryptos is, if I were younger, I would be studying them intensely, technically, because they should be very lucrative.
Mm-hmm. I think that's great advice. Great advice. Walter, throughout your career, I'm sure that you have some absurd stories, things that have happened. We love these type of wild stories on Confessions. Is there anything that stands out from your career, like just crazy, absurd story?
Well, one of the crazy ones was that Farvin Norman escapade. The fact that more than the float had been sold short. But unfortunately, the part of it was that there was a mob in Chicago, and there was a mob in Vegas, and that they were involved in some shady dealings. So it turned out that the shorts were right.
And so there was more short than there was actually like in the float.
Yeah.
Wow. So what was
well, I'm sorry, not in the float, because five money managers had tied up most of the stock. It was a very small stock.
Okay.
So add up the five managers, and they control all but 75,000 shares of the stock. And there's 150,000 shares short. And none of those five guys are going to sell. I'm not going to sell, and he's not. Number two isn't going to sell. Number three is not going to sell. Number four is not going to sell. Number five is going to sell. That only leaves 75,000 shares, and there's 150,000. Well, apparently one of them sold.
Yeah. There's always a backdoor. There's always somebody backdoors.
Yeah.
It's there's always somebody backdooring, and it's usually through Canada.
Speaking of Canada, I'll give you that one. When Psy Management first started out, this is in 1966. We had a very small office, which was rapidly growing. So we had the 22nd floor of a relatively small building. And the money was coming in so fast, they started expanding. So we started taking space on the 23rd floor, 24th floor, and the 19th floor and stuff like that. So there was a telephone guy named George, who worked there full time running cables from the 22nd floor to the other floors. Now, our particular office happened to be previously occupied by Canadian Javelin. And no offense, Mr. Voice of Death, but Canadian Javelin was not the most reputable, did not have the most glowing reputation. It was a sort of a semi-shady Canadian mining operation. So late one evening, I am there late, and George is running around trying to find places to run the telephone cables, and he's rummaging around in the ceiling, and he literally pulls down a bunch of maps. And I always had visions that when Canadian Javelin wanted to goose their stock a little bit, they would reach up into the ceiling and pull down a map and announce a discovery.
Exactly. Yeah, that's the Canadian mining industry, and it happened all the time. Even Bre-X. I mean, that was the first deal I ever worked on.
That was a lovely one.
It was all fun and games until somebody falls out of a helicopter.
I was going to say, at least you didn't jump out of the helicopter.
I was a rookie, so I was my first deal. But boy,
that's probably another thing. Like this when they serve the second subpoena, when the guy jumps out of the helicopter cell.
Exactly, and that's exactly what we did. Because my client, which we call him the Penguin, he had a couple of million shares at 30 cents. And we were selling it all the way up to $200 a share because it got up to the New York Stock Exchange.
Yeah.
And then the guy fell out of the helicopter, and I saw that on the news, and I called him up, and I'm like, he's like hit every single bid.
Hit the bid before the guy hits the ground.
Exactly.
Oh my God, that's insane.
Which is why technical analysis works pretty well on Canadian mining stocks. Well, I'll give you, since we were getting into Canadian thing, and I'm sorry that the Montreal Canadiens are not doing as well as the Tampa Bay. What the hell a hockey team is doing in Tampa Bay, I have no idea. I mean, hockey belongs in Montreal, not Tampa Bay, but we won't go there. I had that. I was literally in the Boston Garden when Bobby Orr scored that famous goal flying through the air to win the Stanley Cup. Wow. It was on Mother's Day. It was overtime. It was a hot day, and they ran out of beer at Boston Garden. And so I know a little bit about hockey. Anyway, so gold is starting to perk up in the late 1970s, and I was at Putnam. And we had one of the people we worked with was a guy named Ian Notley, who was a very brilliant, now deceased market technical analyst out of Toronto. And so the people at Putnam decided that they wanted to play gold and they wanted to get racy. So I was asked to call Ian in Toronto and ask him what the most speculative Canadian gold stock was that they could buy. And so he sort of blinked for a minute, and then he said, well, I guess it's Quebec Sturgeon River. And so the gang at Putnam all bought Quebec Sturgeon River, but they've been to the Harvard Business School, so they don't understand Canadian mining stocks. So what they are doing, that they decided probably one of them ought to go to the company's annual meeting. So I called up Ian and I said, one of them somebody wants to go to the Quebec Sturgeon River annual meeting. How does that work? And after he stopped laughing, which took a while, he said, well, it's probably going to be in some dingy little lawyer's office, and it will probably be conducted in French. They looked at each other because this was a stock that they owned. See, they don't teach that in Harvard Business School.
They do not. They do.
No, they don't. No. JJ, he teaches stuff like that, but JJ, you ought to be a guest lecturer at the Harvard Business School. You probably have to put on a coat and tie rather than the outfit you currently have.
I know.
But
I'll be like Rodney Dangerfield when he goes back to school.
Yeah.
He's telling the prof, oh, you got to grease the mafia because you're not gonna.
Yeah.
That's insane. To this day, JJ, like when Walter, when a mining company, and specifically a Canadian mining company, like comes up on my like scans on my system, like I don't even consider it. I don't even. And they do trade kind of funky at times, JJ.
Oh, of course, they have to, right?
Yeah.
I mean, and before it was a mining company, and the funny thing is when Canadian mining companies all of a sudden will become a Bitcoin company, right? Because what it is I could see the guys. There used to be a place called Tiny's Diner where all the rounders would go and hang out, and they'd be like, "Okay, what's hot?" Internets. Okay, let's do some internets, right? So they take a Canadian mining shell and put an internet deal in it, but they had no idea. They didn't even know how to build a website, right? So now I could just see they're going, hey, Bitcoin, let's sell some Bitcoins. Okay. Let's, so they change it from, Canadian Javelin. And I actually found the 1973 New York Times article where they're sued for fraud by the SEC. It's just amazing. Canadian mining deals are, it's
but again, they can be fun on the way up and the fun on the way down. Just
they
have
are.
to talk about. That's why you need to have a chart on any Canadian mining stock you ever own.
Well, the trick to Canadian mining stocks is to get the stock at a discount before it starts to run. So you go and you buy it.
That usually means you have to know something you're not supposed to know, but we won't have to go there.
No, never.
I love what JJ said. People will ask him like, oh, what do I do with this stock? Or what do I do it? And it's a mining one. JJ's like, you get free shares. That's how you trade this.
Well, the first rule I ever learned, my boss told me was, I said, hey, because we had 200 public companies as clients, and I said, Chief, which one of these stocks should I buy? What's a good trade? He's like, kid, you don't buy stock, you sell it. I'm like, well, how does that work if you don't buy it? He goes, people will give it to you. You don't have to do anything. You just give them, they'll give you the stock and you sell it into the market. Okay. And, the last, before my heart attack, the last 5 years of my life, I lived on S8 paper, which was literally free, so yeah, why pay for stock when you could just get it for free?
All right.
Well, that's a good observation. I'm going to try that.
Oh, with your resume, my God, you could probably get, a couple of 100 million shares from anybody you wanted, and board membership and board seats too.
Can I be a SPAC?
Sure.
Whatever you want, Walter. Yeah.
Whatever you want.
And there are three of us right here on the Treasure Coast.
Exactly.
Well, you, me, and beyond.
Yeah, we can make it work. Yeah.
Definitely. Well, those
all day and beyond.
Exactly. Well, those retired Army generals, and who was that gentleman? Wesley Clark. He was the general for NATO. I mean, how many board memberships did he get? Gosh, Walter, people would pay you to be on their board. You could probably be on like 20 boards if you wanted to.
Yeah. No, I'm afraid they wouldn't, because I'm too ethical.
There
you go.
There's the rub.
That's the ethical people on boards don't get together. Don't work together.
True enough.
Well said. Walter, any advice you give to
However, if you know of any trading rooms that are looking for a board member, I'm available.
Hey,
Perfect.
Excellent. Walter, any advice you give a new trader entering the markets 2021?
Be humble, learn from your mistakes, write everything down. Everybody in the business makes mistakes. The trick is not to make the same one twice. But my problem in life is, after almost 60 years of this, I'm still finding new ways to make mistakes. But you don't want to make the same one twice. Be disciplined. When your work tells you to do something, even if you think it's a bad idea, follow your work, not your emotions. Don't be emotions. I think the best traders are probably the best poker players. That they analyze things. They have ice water running in their veins. They're the best traders. I am a lousy trader, because every time I would trade something, I would want to watch every tick. And every tick that went up, if I was long, I would get all excited. And if it went down 2 ticks in a row, I would start contemplating suicide and stuff. And I just didn't have this discipline. You have to have a certain discipline to be a successful trader, and I don't have it. And if you do, you have to, I think, be as unemotional as you possibly can. Just remember, it's just numbers. It's just dollars rather than scores. But it's like it's like a hockey game, you know, it's, you know, somebody gets 3 goals and somebody gets 2 goals or something like that. Well, you know, somebody makes 3 winning trades and loses. It's just dollars rather than goals.
Right.
Yeah.
It's just, yeah. And I think, I think that's a good way to look at it. Like it's
Right.
not, like trying to detach yourself from like the dollar amount. It's just like almost a way of keeping score. Like when I play poker, that's how I try and look at it. It's like it's just a way of keeping score.
Yeah. Yeah.
It's not, yeah.
And one other thought is the market knows more than you do.
Absolutely. All timeless pieces of advice there, Walter. Let's jump into some of the quotes.
And if you think you know more than the market does, you are about to learn a very costly lesson.
Yeah.
Like Marty Zweig's, you know, 2 famous rules: don't fight the Fed and don't fight the tape.
Absolutely. You know, that was something I really took away from our conversation. And I was telling people this, Walter, when we had breakfast, that like, you know, your humility, and you still this far into the game, still like, hey, I don't know anything. And there is people who just started trading this year and they have more bravado than you do. And it's kind of insane. It's, you know, and like, I just think to the listeners, it's like, I mean, I think it's a very overlooked point. And I think you can go on a string of a couple of like winning trades and you think you're God's greatest gift to trading. And it's like, you know, this is a long run game, you know, not a month or 2, or are you going to be here 5, 10 years? And just, you know, come with that humility, because it's only 1, 2, 3 bad trades and you're done.
Oh, definitely.
Yeah, I'm going to read a quote from page 77 from Alan Shaw, who is another of the founding members of the Market Technicians Association, from Smith Barney. The stock market is the creation of man that has most humbled him.
Yeah, I love that.
You can go from, you know, broaden it out from the stock market to any financial instrument, but it will humble you.
Absolutely. I love that quote. That's a great.
Look at what it's done to JJ. I mean, you know, he does not look like the typical Florida beach goer.
No, I do not.
You know, look what it did to him. I mean, I remember when he was just out there in his Speedo on the beach. And now, poor guy, I mean, even with his VWAP and stuff, which I don't understand, he posts wonderful things on Twitter. He said, you know, this obvious thing or something. I look at it, I said, what? No, so JJ has a lot. I have to watch some of his videos to understand them. But look at how it's, even a great trader like JJ. Look at what it's done to him.
It will humble you. It'll definitely, as soon as you get too big for your britches, it takes you right out to the woodshed.
Yeah. Here's another. I got another quote. This is from. I'm just. Go ahead. Say something. I'm looking.
Okay. You know, after our breakfast, you know, we posted the picture, and, you know, I'm getting all these messages from these CMTs like, oh, no way. Like, you sat down with Walter. How was it? You know, blah, blah, blah. Because you're a founding member of CMT Association. Just tell us about how did all that come together?
Well, back in the old days, market technicians were not very well regarded. We were sort of, you know, the bad kids in the neighborhood with it, and so we decided that a bunch of us decided that maybe we ought to try to build up our reputation. So some of us got together, and I think there were 19 of us at the beginning. Founding members just formed a group called it was called the Market Technicians Association in New York. And the first fight they ever had was because I was working at Putnam in Boston, and I ran the membership committee, and Bill Doan was at Fidelity, and he put out the monthly newsletter, and Bill Diani worked at Wellington, and he put out the quarterly journal. And we were all, you know, subsidizing, you know, our firms were all very much in favor of this. we said, we're doing all the work in Boston, and you're called for the Market Technicians Association in New York. So we petitioned to have it, the New York part dropped. So it became the Market Technicians Association. And it was just trying to, professionalize. And I think finally, after many years, it has, so that they understand. Because one of the things people don't understand, this is what I had. This was the toughest thing I had to get through to the Harvard Business School students. A company is not the same as the stock. And so you can tell me, pick any company you want. Let's say Tesla. Okay. You can tell me everything that Tesla is going to do over the next 5 years, fundamentally, what they're going to earn, how many cars they're going to sell, whatever. And that doesn't tell you what the stock's going to do. And since you buy the stock rather than the company, you should analyze the stock, which is technical analysis. And I won't go into it, but the big thing was McDonald's Corporation in the early 1970s during the Nifty 50 era was selling at 75 times earnings. The stock had the earnings grew at 25% per year, compounded for 7 or 8 years after that, and the stock was cut in half. Wow. So if you knew how good McDonald's company was going to perform, that didn't tell you whether the stock was going to be a buy or not. So a stock is not the same as a company. Technical analysis is what you use to analyze stocks. Therefore, technical analysis is the most basic part of the investment process.
Yeah. Yeah. Well, I know a lot of people.
It can be useful. It can also be useful in trading.
Yeah, it absolutely can. Yeah. A lot of people are grateful for, you helping spearhead, all this.
Well, the one thing I will say that the one thing that the MTA did was, back in those days, there was no sharing of information. Everybody had their proprietary work. And now people share it a lot. I mean, the stuff JJ is posting about, whatever the VWAP or the D thing, there is very little really proprietary stuff. Everybody is sharing information and then using it to build on it even further. And that's something that the MTA did, back in the 70s and 80s, that they brought, technical analysis out into the open, where methods were openly discussed. So Bollinger creates the Bollinger Bands. He tells you exactly what they are. He doesn't say, here's a little thing I came up with. I can't tell you the formulation, but this is what I came up with. And so that there's a great deal of sharing of information, which I think is, that's why people today are starting out and functioning at a much higher level than we did when we started out. Much higher.
Yeah, I always like to joke with with CMTs, especially like the ones we've had on the podcast. They're so proud. It's like on Twitter, it's always like they'll have like their name and then CMT. It's like they're a doctor or something, right? It's like always like the title next to it. How come you don't have the CMT, like Walter Deemer CMT?
I don't have one.
You don't have? Well, you found it. You helped founded it. What? I
founded it, but the CMT is the test you have to pass. And the reason was that the beginning, they had the test material, and they had these things you had to learn, these various indicators. And I had Metastock back in those days, which was one of the ancient stock analysis programs, and they had a bunch of canned indicators. And I accidentally punched in one of the canned indicators into the profitability test, and it lost money. And I said, why should I learn how this indicator works to pass the test if it doesn't work? So I didn't, and I didn't pass it. So I'm not.
What are you going to do?
So I am a member of the CMT Association, but I am not a chartered market technician.
Okay. They should give it to you out of sympathy, though. That's crazy. I'm gonna sign a petition. And we'll get it going around.
Well, they gave me an award for living longer than anybody else did. But they didn't. I didn't pass the real test.
Okay. All right.
Yeah. The real test is being able to survive in this business, whether it's for weeks, months, years. It's just survivability is the real test, not whether you know the stuff.
Yep, I love that. I really love that. So let's jump with that. We'll jump into some of the quotes from the book, Walter. Some of these we've probably touched on in conversation. If we do, we could just move on quickly. Won't waste too much time. First one I wrote down here, like the stock market is a better economic forecaster than economists. I guess we kind of spoke to that already.
Yeah, except I will add one thing, and that is that the old joke is the stock market has forecast 9 of the last 5 recessions, which, you know, people laugh at it, but that means that the stock market, there were 5 bear markets associated with recessions. It means there were 4 bear markets that were not associated with recessions. And since you are not an economist, but you are a stock market trader, you need to know what the market is telling you, not what the economists are telling you.
Yeah, exactly.
And the other thing is the thesis I did at Penn State back in 1963 was comparing leading economic indicators to the technical indicators. And it turned out, you know, basically leading economic indicators lead the economy, but not the stock market. The stock market leads the economy. As a matter of fact, the stock market is a leading economic indicator.
Yeah.
So if you want to know what the economy is doing, look at the stock market. Don't look at the economy to tell you what the stock market's going to do. You'll be hitting behind the ball.
Absolutely. And I think that's a big point for sure. JJ, I know you're gonna like this next quote coming up here.
He's smiling, I can tell.
All price changes are caused by an imbalance in supply and demand.
Yep. Which is why I don't watch CNBC, because they tell you why everything happened. You know, that when we came on, I said, you know, why did the spiders go down after the close? You know, I don't know why. Well, I do know why. There was more supply than demand. So the price went down. I don't know why. We may never know why. Maybe somebody got, you know, plastered in a bar and decided to dump some. I don't know.
Which would not be a first.
It would not. Absolutely. Yeah.
Absolutely.
But we used to. This is not true, but I told people it was. When the market was really going down badly, you know, we'd have a really bad day. We go out to lunch and order a round of drinks, and then somebody would call the office and ask whether the market had turned up. If it had, we had lunch and went back to the office. If it hadn't, we ordered another round of drinks. And that went on until either the market turned back up or we didn't care anymore.
That's great. All right. Next one. Did you have anything to add, JJ?
No.
I'm just the whole supply thing. I'm just curious. I mean, I've been only doing this since '93, but I've never seen such a lack of supply or the warehousing of big positions by companies like BlackRock. I mean, you know, these guys are holding billions of shares of these companies. I mean, you look at Amazon today, it's up 4.6% on 7 million shares of trading. Are you at all concerned about the lack of liquidity? I mean, if somebody came out and tried to nail out 30 million shares of Apple or Microsoft in an order, I mean, this thing would go bid off pretty quick. The markets seem to be getting thinner and thinner up here.
Yeah, and you raise an interesting point, because I think part of it is because of all the index funds that are going on. They put the stock away and it's just gone. Between that and the corporate buybacks, the amount of stock is the liquidity is bad. Yeah. And someday we will learn what the consequences are, but probably not today.
Not today, exactly.
Yeah, it'd definitely be interesting to see how that plays out. Next quote.
It will be. Yeah, write on my tombstone how it played out, will you?
Hey, you're not going anywhere. Wait. You're not going anywhere.
Just write on and just say, you were right, it didn't end well.
All right, Walter, there is more human intelligence focused on the corner of Broad and Wall than any other place on the planet.
Okay, that's from Richard Russell, and that what he's saying is when you're analyzing the stock market, let's call the spiders the stock market for the moment, that you're analyzing the net focus of human intelligence, trying to figure out what the stock market is worth. And what technical analysis does is analyze that supply and demand as the focus, as the net result of all that human intelligence. So what you are doing as a market analyst is analyzing the sum total of all the human intelligence, and it's all focused. Well, at that point, the New York Stock Exchange was it. Now, not. But at that point, it was all focused on the New York Stock Exchange, which happened to be in the corner of Broad Mall.
Yeah. Yeah, it just makes me think it's, just respect the game. People got to have respect.
Yeah.
For the game, and I guess it goes to the whole humility point we were talking about earlier.
Have a lot of respect, absolutely.
Yeah, yeah.
And don't think you know more than the market, because you don't know more than the sum of all human intelligence.
Exactly. Right. Exactly. That's why I really like that quote. Next one is another favorite of mine. Always remember that we are dealing with probabilities and not certainties.
Yeah.
Yeah,
which is a nice way of saying, remember, when you put on a trade, you may think you got a slam dunk, but it's not certain. I mean, there is nothing that is certain in this world, especially in the financial markets.
Especially
which is why I believe that successful traders look at the risk as well as the reward.
Yeah, I mean, it's a must. You absolutely have to. I think this is a hard thing for the human brain to wrap its head around, that 90% is not 100%.
Precisely.
Right? Yeah.
Precisely.
It could be tough things. All right, next one.
Yeah, and that's why hedge funds end up blowing up every once in a while, because they figure that the 95 or 99%, and then the 1% comes along and boom.
Yeah, I think it brings it back full circle to the whole point with survival, right? I think you have to protect yourself against it, like black swan, quote unquote, type of events.
Mm-hmm.
Because it could be detrimental. All right, next one here.
Which means one has to monitor the amount of leverage one is using.
Yeah, absolutely. Markets and stocks can stay overbought for a long time if the advance is really strong.
Right, which is basically explaining what's happened to the stock market in the last year. It goes up and then never corrects. What it gets down to, and this is something that applies to even very short-term traders. That when the market has an advance like it's had in the last year, and it doesn't have a normal correction, what it is saying to you is that the underlying trend is so strong, is preventing the normal correction from taking place. And the underlying trend can be anything, but in this case, over the last year, it was a long-term trend. But it could be on a very short-term trade, that if something is supposed, like Amazon, I didn't watch it today, but it looked like it was probably going straight up. And normally, I would think during the day, you have these little intraday corrections and things like that. And you have something that goes up and just doesn't correct like it's supposed to. It just goes up and then goes sideways for a little while and goes up. That is saying that the underlying trend is extremely strong. So it's sending you a message.
Yeah, absolutely. Yeah, and these are the type of messages that us as traders have to be keen to and pick up on. Absolutely.
Which is another way of saying when a stock doesn't go up on good news, it's a bear market. When a stock doesn't go down on doesn't go down on bad news, it's a bull market.
Right. Which was another quote from the book. Okay, next one here. What is not happening can be more important than what is.
Which again goes back to the fact if something is supposed to have a normal counter trend move and doesn't, it's telling you something.
Yeah, I find that interesting, because that's almost counterintuitive, right? What's not happening can be as important. So I think that's good to keep, bring that awareness to trading. All right. When the time comes to buy, you won't want to. Name of the book. You've touched on that.
we got into that discussion about, the Putnam fund managers and stuff like that. But yeah, just go back to March a year ago. When I was locked up, it was right when the news was bleak. The S&P had just gone down 32% in a matter of weeks and everything. The economy was shutting down, the world was shutting down, everything was shutting down. And that was the time to buy. And I will guarantee you, anybody who bought that day, and the number of people today who tell you who bought that day are far, far higher than the number of people who actually bought that day. But the number of people who actually bought that day, who put in a buy order, did not want to buy because things looked bleak. They could only get worse. And that was it. So it's just human nature. And we can also say, and we will leave this to the people who are not retired, which is not me. When the time comes to sell, you won't want to.
This next one is more of a, I guess, kind of funny quote. I'll let you talk to it. There are no atheists in bear markets.
Yes, there were various fund managers at Putnam that I would see only after the market had gone down for a rather protracted period of time, and they wanted to know what was going on. Other than that, they thought technical analysis was mumbo jumbo.
Yeah, right. But when things are in, they're coming up. Yeah, they're coming. That's funny. When everyone thinks alike, everyone is likely to be wrong.
Yeah, this is contrary opinion, which I take a step further, which is Deemer's law of perversity. And that is the stock market will do whatever it needs to do to embarrass the greatest number of people to the greatest extent possible.
Totally amazing.
Figure out, take a look at what's happening in the bond market in the last couple of weeks. Everybody knew that interest rates were going up. Everybody knew. Everybody was convinced. And yet I think I saw that interest rates are coming down. That is embarrassed an awful lot of people who were, playing, for higher interest, or were betting on higher interest rates. And it sort of squeezed some shorts and stuff like that, I would guess.
Yep. And I guess this next one sort of goes in conjunction with it. Extremely crowded trades rarely work extremely well.
Yeah, when it's obvious to everybody that usually it's gotten to the point where it's already reflected in the market.
Yep. All right. And last one I got here, which I believe this is from Mark Twain, possibly. History doesn't repeat itself, but it often.
Right, exactly. Which is why when we were talking about how the market changes and everything, that there have been various waves of public participation in the market since I first got involved in the early 60s. But each one is different. Each one has similarities. Each one has the greed and the get rich quick thing and everything. But there are no odd lotters today, but we didn't have Robin Hood back then. So,
that's true.
Yeah.
Different vehicles.
Yeah. But and that's what I love about it. And it's especially this quote. It's like, it doesn't repeat, but it rhymes. And so it's the same, but it's not, and I guess it's like learning how to relate to the events, as they come to you.
Well, it's like, we were talking at breakfast about, Reddit and everybody when they were playing, we're jamming GameStop and AMC and everything. It wasn't terrible. Everybody's on social media doing it. That's what hedge funds used to do. You used to go have private dinners with 20 of them together, and they'd all swap ideas and they'd all figure out which ones they were going to play.
Yeah.
So it's different media. The hedge funds are on the phone back to each other all day.
Right.
Back and forth. Hey, look at Amazon. Hey, Amazon going. Oh, let's jump on Amazon. Oh, hey, Amazon's. Look at Amazon go. It's never done this. It hasn't done this for weeks. We better get on. Yeah, let's get on board.
Yep.
Yeah,
So
exactly.
they just don't do it on Reddit.
Yeah, they don't do it on Reddit, or like our. It makes me think of our buddy Turney Duff, JJ,
Oh, it definitely.
getting together with his other hedge fund buddies, and they all, jam in some healthcare stocks.
Just amazing. I was curious, Walter, did you ever meet Barton Biggs from Morgan Stanley because I read his book Hedgehogging, and one thing he talked about was this Triangle Investment Club dinners that they used to have, and I never knew if it was, some like a tall tale or whether that actually ever existed.
I don't know personally, but I'm sure it did.
Okay.
And there were also the Brimberg lunches, which I did attend. And that's where Bob Brimberg, Scarsdale Fats in the book, The Money Game.
Oh, okay.
And he would have a bunch of people together, and everybody would talk about the big money managers, and they would talk about what they were doing and what they liked and what they didn't like. I was always asked to give the benediction, which was the technical outlook.
Oh, very cool. Amazing.
All right, and that's all the quotes I got. That's all the.
Well, there's more, but they'll have to buy the book.
Yeah, well, I can't give everything away, Walter. I don't want to ruin the whole book. Those are some of the ones I liked. Go out and get the book, listeners. He has 3 other books. Go get those. Walter, besides your own books, there's one book you would recommend to people on trading. Which book would it be?
Reminiscences of a Stock Operator.
Mm-hmm.
Best book on market psychology ever written.
Mm-hmm.
It was written, I don't know, in the 1940s, I guess, or something, and it still rings true today.
Yeah,
Yep.
It's incredible, and I know JJ agrees with that.
Got a copy on my desk. It's my Bible.
Yeah,
incredible. Yeah,
I think probably we all do, and it's funny because somebody once asked Jerry Sy, he said, what's your favorite book on investing? He said, and he told me, it's really Reminiscences of a Stock Operator, but I didn't want to say that in public.
Mm-hmm.
So the people who think it's a great book, may not admit it in public, but
right.
That's the one.
Just quickly, I got to ask, what was it like working with Jerry Sy? I mean, just for a young guy like me, you read about these sort of historical figures. What was he like?
He was the first go-go manager, and then when people started doing what he did, he wasn't able to keep up. But he was rather unique. There were 2 big funds at Sy Management. Manhattan Fund was the big one, which Jerry ran most of the time, and then the second one was called the TMR Appreciation Fund, which a guy named Bob Edwards, who was a much better money manager, ran. And one day, Bob Edwards is sitting, in my office. I was Jerry's eyes and ears. I was supposed to keep him abreast, keep him up on what was going on in the market. So one day, Bob Edwards looks at the tape, and he's watching the tape, and he calls the trading room. He calls the trader and says, looks like there's a block of Burroughs going to go up. I want to buy 25,000 shares on the cleanup. Mm-hmm. And the trader says, well, you're right. There is a block of Burroughs that's going to go up, but you can't buy it because it's Jerry's block. He puts the phone down and looks at me. He says, what's he know that I don't know? Another story. Jerry knew all sorts of people. Charlie Bluedorn was at Gulf and Western.
Did you ever meet him? Did you ever? The Mad Austrian of Wall Street.
The what?
The Mad Austrian of Wall Street, Charlie Bluedorn.
Charlie Bluedorn. So Charlie Bluedorn comes in, Gulf and Western.
Yeah.
Was within probably 2 points of its all-time high. And Charlie Bluedorn comes in and has lunch with Jerry and says, I am going to make 3 acquisitions in the next couple of weeks, and they are going to knock your socks off because all 3 of them are members of the Dow Jones Industrials. And Jerry goes out and puts every fund in the place puts a 5% position, which is the max you're allowed in Gulf and Western. And the guy who was running one of the income funds says, yeah, I don't even know why he did it, but couldn't he have bought one of the convertibles so I could have got some income out of it? And Charlie Bluedorn did make 3 acquisitions, but nobody ever heard of any of the 3 companies he bought. And they were definitely not members of the Dow Jones.
Oh my God, that is legendary. I mean,
and Gulf and Western did nothing but go down after that.
That's quite amazing. I just, the only reason I know about him is because from Robert Evans' book and movie, The Kid Stays in the Picture. Bluedorn was Gulf and Western. They made The Godfather and that sort of thing. So, and he I guess he was a trader who started Gulf and Western from Michigan Bumper in the old days.
Michigan? I didn't know that.
Yeah.
Yeah. Well, there was Charlie Bluedorn and there was Jimmy Ling and there were a couple of others that they all decided that 2 + 2 = 5, and it turned out that it didn't. And that was the conglomerates.
Wow.
You build a the only person who ever built a successful conglomerate was Warren Buffett.
True. Very true.
But we won't.
Wow.
Yeah.
But the thing is, see, I never worked for Warren Buffett, so I never analyzed companies. I analyze stocks. Exactly. He doesn't buy stocks; he buys companies.
Right.
All the rest of us, we buy stocks.
True.
Or futures, or Bitcoins, or cryptos, or something like that. It's something that trades.
Yeah, or NFT.
Definitely.
Yeah, we go on and on, but yeah, I think it's a good place to conclude today's episode of Confessions of a Market Maker. If you guys enjoyed today's episode, please like and leave a review. If you'd like to trade alongside JJ, myself, and a supportive professional group of traders, join us at microefutures.com. Walter, let the listeners know where they can find you and anything else you want them to know.
They can find me on Twitter at Walter Deemer, and they can find me on Amazon, and they can find me in Palm City, Florida.
Hey. There we go, JJ.
And they can every once in a while, they can find me having breakfast for some very nice people at Mulligan's.
Hey. No, JJ, parting words.
Oh, what an absolute pleasure. Thank you so much, sir. Just it's great to have our legends with us, and come back anytime. Love to have you. Thanks.
I have fun. I see what you do, and I say I have nothing in common with you, and then we have breakfast, and I'm amazed how much I have in common with you.
Yeah, yes, it's been a pleasure, Walter. I look forward to our next breakfast, and be easy. Thanks for joining us. And so for Walter Deemer, I'm Paulie Walnuts. He's the gorilla House Street. You stop, so.